Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, October 29, 2012. Well, a continuation of the trend to the downside today. Candlesticks made a lower high but a higher low, slightly higher low. And the prior trend was to the downside, therefore the same trend is in force in the first time frame. Black body candle. Previous day's trading we had a small white body candle with a larger shadow on the bottom representing rejection when the market interacted with the trend line that's been drawn here with the dark blue line. And today the market probed outside of that trend line once again and closed just at the trend line. So the trend line is affording some support to the market at the moment. This candle is a fairly bearish candle, a largish black body, slightly larger than the black body from two previous trading days ago, and it denotes the sellers making net bearish progress. The sellers have also closed with control of this market, a moderate amount of control. They've closed between the midpoint and the low, and it does suggest that the market may test lower levels. If the market does test lower levels, however, we do have very strong support down at the 128.57 level, which coincides roughly with the top of the cloud, and that will be very, very strong support for this market. We also have the market interacting with the trend line at the moment, and that is quite significant. Excuse me, a bit of a frog in the throat there. So very strong support down below, and very strong support all the way down from the 128.57 level through the bulk of the cloud, and it also coincides with this highlighted level of previous support and resistance down to roughly 126, and just below there at 125.86 we have very strong potential support as well. To the upside, however, we have fairly strong resistance, so we have a market that's really bound between strong support and strong resistance. The 129.68 level has been an important area of previous support and resistance for this market, so will offer itself as potentially strong resistance to the market trading higher. And also it coincides with where the Kijun-sen is trading, around that area, 129.70, so very, very solid resistance overhead. We also have strong resistance above there at the Tenkan-sen at around 130 and 130.25, so a market that's really bound between these two strong areas. In terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here today once again we've seen rejection from below the 78.6% level. It does set the market up for a potential change of trend, but we also just have the 100% level just below there, and that coincides with the top of the cloud, and it strengthens the potential support down at that 100% level at 128.59. So very, very strong, solid support down below where the market's trading. We also have the 161.8% level for the Fibonacci retracement. We're in an expansion mode of that, traded through the 100% level today in a bearish way, and the next target is the 161.8% at 128.56, coincides with the top of the cloud, the other Fibonacci ratio, and previous support and resistance levels, so super strong support down around this level. Now in terms of Ichimoku, this market remains bullish in the long-term time frame by trading above the cloud, so quite an important event remaining up above the cloud when we've seen other markets, the equities markets for example, trading within the cloud, and this market's been able to maintain its position above the cloud, but only just. We are just trading very close to the cloud, so if we do enter the cloud we have a neutral market, so we do need to be aware of that. But the market remains bearish in the medium and fast term time frames by trading below the Kijun-sen, the pink line, and the Tenkan-sen. As I've mentioned already, those lines will offer as potentially strong resistance. We can see here 3 trading periods ago where the market tested to the Tenkan-sen, was rejected from an area above there and failed to close above the Kijun-sen, the pink line, so that will offer as very, very strong resistance. We also have the Kijun-sen pointing flat, and when that's flat, price action is attracted back towards the Kijun-sen, so there is a likelihood that this market could start trading up again and test to the 129.68 level. But overall, a market that's just bullish in the long-term time frame, bearish in the medium and fast-term time frames, but a market that's bounded between very, very solid support down below and strong resistance overhead.